Let's review $50 into these 3 stocks will surpass your full-time job by ZipTrader and Charlie. I did a recent review on Charlie from ZipTrader, and I found his video to be extremely clickbait. His style of talking to people in baby talk also doesn't appeal to me at all, and I personally find it very strange. However, maybe some people like it, and if they do, then I respect that. It's just not my style. I'm going to try to evaluate this video using a clean slate and not allow my prior biases to influence the commentary.
Dollars into these 3 stocks will surpass your full-time job. The stocks we're going to talk about have exponentially growing businesses, proven track records, and in my view are clearly setting up to explode in 2025. This year and this year alone is going to be an unprecedented opportunity, and similar to the opportunity in 2020, if you don't listen.
We don't know that though. The market's been up over 20% in 2023 and 2024. We can't tell the future to know what the market's going to do this year.
If you don't watch, and if you don't exploit the opportunities given to you, well, you are going to regret it for the rest of your life. There's a reason my videos are now getting some 500,000 plus views at times. The reason is because people see how big of an opportunity we're heading into, and they want to prepare. The actions that you take today could set you up for a completely different life a few years down the road. Now, in order to achieve the objective stated in the video title, you will need to leverage your money with options. For example, if you put $50 to work for you in shares, that might only buy you 1 share of a $50 stock, but it can buy you 100 or even 1,000 shares worth of leverage with options for that same exact $50.
Options are complicated though. You definitely need to know what you're doing. If you're going to use options to buy lottery tickets without strategically structuring your trades, then you're probably going to end up losing money.
Tesla stock, you open up Moomoo right now, which link down below if you want to sign up for it.
Moomoo, in my opinion, is a complete shit broker that no one should ever use.
But you open up Moomoo, you can see 600 strike calls went up over 77% on Friday. Now, of course, there's extra risk, and you have to have real strategy and real risk management when it comes down to trading options. But the opportunity is there for those that want to.
All right, let's see what the 3 stocks are.
Exploit it. And in today's video, we're going to break down the 3 stocks to leverage your $50 into for massive, massive gains. Always do your own due diligence on all ideas presented. Okay, number 3, let's start with C3 AI, ticker symbol AI. So as AI continues to dominate tech trends, C3 AI is an undervalued frontrunner. C3 AI is a leader in predictive analytics, fraud detection, and AI-driven optimization for industries ranging from energy to healthcare. Their platform enables companies to quickly implement AI applications without needing to build everything from scratch. Thus positions them as a pick and shovel play.
Let's see what stock analysis says about C3 AI. All right. So for C3 AI, you can see for 1 year, it's up about 35%, which is great. Since 2021, it's down 12%. It's very small. It's less than $5 billion. It has negative net income. Generally, these companies are a huge risk for going bankrupt. Let me look at how much debt it has on its balance sheet. So it has around $730 million of cash. Yeah, it doesn't really have any debt, which is great. This company is way too risky for me. I definitely wouldn't touch it. And for him to say that you can invest $50 in this stock and it'll replace your full-time job is definitely clickbait, especially considering that since inception, it's lost money.
In the AI gold rush, which we're still right in the middle of.
Let's check out the second stock.
Heavyweights like Shell, Raytheon, and the U.S. dollars and better risk-adjusted returns for lenders. Well, traditional lending metrics often over.
Upstart, let's check that out. Over the past 5 years, it's up 218%, which is great. Over the past 1 year, it's up 91%. It's also a small company with about $6 billion in market cap. It has negative net income. Anytime a company has negative earnings, I'm concerned because that means that the cash flow is probably negative. And if it has a lot of debt, then I'm going to be concerned about bankruptcy. So let's quickly check out the debt and also the cash flow. It has $445 million. So this company actually has a lot of debt. You can see that it has about $1 billion in debt, which definitely bothers me. And then plus they're going to have to pay interest expense on that debt in order to service it. Let's look at the cash flow. So they're issuing a lot of shares in order to pay their employees. They have positive operating cash flow. I definitely want to know what this other operating activities are. Let me see. I don't know what it is. It issued a lot of debt. Let me look at its shares outstanding. Yeah, it's been issuing a lot of shares to increase the dilution. I definitely wouldn't touch this company. I'm concerned about its high debt rate. Let's check out the last recommendation.
With the comparable subscription-based healthcare services directly to skincare and mental health. This isn't just any healthcare company.
HIMSS, I think I looked at HIMSS previously, and I actually liked it. I thought that because people have a tendency to be pretty superficial, that locking people into subscription models for hair loss and things of that nature is a good business model. My gut feeling is that this one's going to be my most favorite pick, but let's check it out. Hims has a market cap of also around $6 billion. It's actually making money over the past year. It's up 222%. 5 years. So if you take out last year, it's actually down. Its financials, very high revenue growth rate. It has diluted itself by adding more shares. It has very high gross margins. Let's just briefly look at the debt. Yeah, it doesn't have debt. It has net cash. I think by far Hims is the best recommendation in his video. Even so, I think that this is another clickbait video by Charlie from ZipTrader, because the reality is if you put $50 into these 3 stocks, there's no guarantee that you're even going to make money, much less surpass your full-time job. Let's see if he says anything else.
In this year of 2025 is immense. I think in 2025, you're going to see Hims go that are just absolutely must go straight up. Without many. Finally, an honorable mention, IWM. So after years of underperformance, small caps are set to seriously outperform in 2025. Small caps have been trading.
With IWM, I'm not a big fan. If you look at the S&P 500, what's driving the gains are the largest companies, such as the Mag 7. But there's probably 400 companies in the S&P 500, which are dragging down the overall returns. With IWM, I think that there are better indices out there, and that's a pass. But IWM is definitely better than his C3 AI stock, and probably better than Upstart as well. And that's about it. If you like this video, then watch the video that's popping up on your screen right now, because YouTube believes that you would enjoy it the most.